What exactly did you find in these surveys that you've been working on?
Well, we've found, a variety of things. I think we do annual surveys in Nigeria, Kenya, Uganda, and Tanzania. And like you said, we see that Kenya is really the leader of the pack. And most of the gains, especially for the poor and the rural part of the population, have really been driven by mobile money. And so a lot of people have bank accounts, people have other types of financial institutions, but over 95% have a mobile money account, right? Either alone or in addition to the other types of accounts. And what we're seeing really happen in Kenya is that things have moved far beyond the initial stage of send money home using M-Pesa. And what we're seeing is that is really strong growth, not only in financial inclusion, but also in the population that are using advanced services that are beyond just person-to-person payments. So we're seeing is a real ecosystem starting to develop that's drawing in a larger and larger share of the population each year. And we can track that very clearly over time and give a lot of very detailed measurements of what types of services people are using, how they're using them, and which populations are adopting them faster or slower when we look at the different demographics.
Somehow it's Maggie. It's quite interesting, about these trends, because if we look at the kind of growth that has happened since 2012, we, however, still have people who own bank accounts still static at 30%. Help me explain this entire trend. Why do we have the numbers, especially with bank accounts, still static as compared to the growth in digital services?
Yeah, so when we ask people about whether you have a mobile money account, whether you have a bank account, or whether you have some other type of account, typically people are answering, are saying, yes, I have a bank account, when they actually went to a bank branch and went through the process of opening that account, and they actually used that account through the branch, right? Some people are also answering yes to that question when they use an agent, right? A banking agent at a location that's outside of a branch. But what we see with services like M-Shwari and other bank mobile money partnerships is that people actually have bank accounts, but they're accessing that bank account through the mobile money interface. So they don't actually necessarily, when they're asked a survey question, they don't maybe even know that their M-Shwari account is actually enabled by a bank account on the back end that provides credit, provides a savings facility, right? That actually allows them to do more with their mobile money account than just do basic transfers, cash in and cash out. So as we see that growth in advanced users, right, across the region, generally these people are taking up services that are linked to the banks, and the banks are really benefiting from forming partnerships with telcos that are providing the mobile money services typically, and providing those banking services through the digital interface on the phone. Now, they're also doing that through mobile apps and through through the internet. But those, of course, require smartphones or laptops to actually access the internet. Whereas in East Africa, the typical user is still using mobile money through a basic phone, USSD interface, right? And through that, they can still access banking services. So I think what we're seeing is a real ecosystem growing that the banks are benefiting from, even if people don't actually know for sure whether or not they have a bank account.
That's rather very interesting, Samuel, that you did touch much of some people having bank accounts but not necessarily using them. Help me understand, we did see some raise in the mobile money space in Tanzania, but only between 2016 and 2014. With the year 2016 mainly and 2017, we did see at least a 50% drop in the number of people sending money via these platforms, and also citing that they were unregistered SIM cards and unregistered phones, and more regulations on the same, with new taxes coming through. We've seen the same happening with Uganda. About a month ago, they will be now introducing a new tax on tax charges on people sending money via mobile money. Do you see this as one of the biggest constraints on financial inclusion at this particular conversation?
Yes, absolutely. What we saw in 2016 with the drop in registered users, right? So people who had a registered mobile money account, we saw that drop in Tanzania, and we believe that's because of the increased cost of mobile money due to new taxes, mainly. Yeah, as you mentioned, there were also some so-called fake phones and SIMs that were deregistered. And that had an effect too. But in 2017, we didn't really see the rebound back to the level of registered use that we had seen in 2015. So instead, we saw people switch from registered use to unregistered use, right, where they simply use the basic money transfer service through an agent rather than through their own registered account on their own phone. And so and it's very clear that the most price sensitive segments of the population, the poor, rural segments, and also women, lost their mobile money accounts at a much higher rate than the rest of the population. So that price sensitivity, I think, is really having a negative impact on adoption on financial inclusion for the poor.